Hello. In this video, we will have a look at how we can potentially beat the market investing in Norwegian banks and Norwegian savings banks. This is a proven method that one of the best investors of Norway has done for many, many years, and it still works, in my opinion. That's because the Norwegian banks are so cheap, always, almost. At least they often get very cheap. Why is it so? We can have a look at that, but in this video I will show you how you can measure it yourself, and I'll share with you when they are cheap and what this famous investor Arne Fredli has said about this case. He has invested for many years, and this article is from the financial newspaper of Norway. 10 years ago, this article here, and it said that his best investment maybe was Bank Norwegian. You may know the Norwegian airline company. They had their own bank associated with it. And he also invested in Pareto, a niche bank, which is one of the most profitable banks in Norway when it comes to return on equity. And you can see he has made a fortune owning and buying cheap banks in Norway. And he says, if you look at Norway, they are very cheap compared to Sweden, for example. In Sweden, they are priced 2 to 3 times as high as Norwegian bank shares. And in my experience and opinion, it still is a lot cheaper outside of Norway. Yeah, so maybe the only cheap thing you can buy in Norway is maybe bank shares then. So let's have a look at that. We see here that the perception that Norwegian bank stocks are cheap often stems from a combination of factors. Yeah, it says in Gemini that it's lower growth expectations. I don't agree with that. Oil dependence and Norwegian krone weakness. No, many of, I would say they, it's not, I don't know really why, but they are really profitable, the banks, and more profitable than the average bank as a group, I would say. Norwegian banks are more profitable in my opinion because it's, yeah, Norwegians are very good at servicing their debts. They also have a because of the rich state, there's more of a safety system to be able to service the debt in times of less income, for example. It's or if people lose their job, for example, it's possible to still get some income from the state for a limited time, and that helps the banks to not have a loss on their loans, for example. We see here that Norwegian banks, they have strong fundamentals, and I've looked at a lot of banks and follow at the end of the video, and I will show you some examples. And we will measure it in terms of return on equity. And if you continue watching this channel, I'll share with you the many indications that we have a good bank, and not only high return on equity, but also how they operate. And then the method, I will show you then, how can we buy these shares cheaply? And then get amazing returns such as investor Arne Fredli. He has probably beaten the market in all of his bank investments as a group. And it's really possible because I still see the pattern happening 10 years later. Yep, so in my opinion, it says the perception, but it has, in my opinion, over year after year or over a long time, it has always been too cheap to buy banks in Norway because they are much more profitable. And I'll share with you how you can use Fiscal, for example, to find out when they are priced cheap. And if you Google about this investor Arne Fredli, he will say that it's often good to find a Norwegian bank or a profitable bank that has return on equity on more than, yeah, if you have a good return on equity, more than average, say 15% is very good, then it's really cheap to buy a bank stock when it's trading close to book value or less than book value. So if you use a terminal such as Fiscal here, which I recommend and use, and you get a discount code here as an affiliate. Then you can go here and have a look at the Norwegian banks that are, they are organized as regular limited companies for the public. There are other types of banks, these savings banks, that have a ratio where you cannot use the terminal's price book because you have to adjust for the equity certificate ratio. And this is only in Norway where we have this odd arrangement for banks. I can share that in another video, but then you have to look in the annual reports and have a look what is the real equity. Yes, so then let's have a look at the biggest bank of Norway, and you can have a look here. If you just see the history here, you see, for example, the last 5 years or so, or since July 2021. If you see just the development of the dividends and the price increase, it's been pretty good. 4 years and 3 months, giving 17% annually here, just by holding it long term. But it can get better also if you buy the bank really cheaply. And then if I show you here, you can go to ratios and have a look at the price book. Usually they don't have much intangible assets, so let's use price book here, or you can use price in terms of tangible book per share. But if you see here, back in 2021, the bank was trading at roughly 1.3 in price to book. That's rather cheap, and I'll show you the return on equity also. And then now it's trading at 1.6 or so. It's normal priced, but then the investors are still getting market-beating returns, at least historically here. And my argument is that if you are disciplined and just waiting until a bank, very profitable bank, is getting very low priced compared to price book, then you will do much better as long as the bank is still being as profitable as it has been. You can see the return on equity, and here you see it looks like it deviates a lot, but you see it ranges from 10% here to 17%. So it's really high. And if we look at another example here, if you look at, let's see, Pareto Bank, which was mentioned by Arne Fredli, you can have a look at the profit on return on equity, I mean. And over a long time, you see that the return on equity is around 13-14%. And that's really good. And if they can sustain that because of some kind of niche or competitive edge in the market, or just maybe it's just easy to have profitable banks in Norway, then if you're right about that, the return on equity will be sustained at a good return. It's really good to buy those assets of the bank for less than book value. Okay, so if you would buy it at price book 1, which I can show you, you could have done this several times in this bank, your return should be close to the return on equity of the bank in the long run. That's pretty good. And also, if you also buy it cheaper, like there has been some times when you can get the shares really cheap because some people in the market are anxious and sell them way too cheap. For example, I bought shares here, roughly 0.9 price book, and now it's on the high end, you see, but then even just buying at the 0.9 in price book, if you do that on average in very profitable banks, it has been a very good investment, historically at least. You see 0.8 in price book, and in the pandemic here, it was at a 50% discount to book value. And that's the idea. I'm sitting here waiting now for the price book to fall down to 1.1 or 1.2 or below, and then see if I will buy shares here, for example, again. And if I show you an example here, how much would you have earned if you bought this in November 2022? I'm sorry, 2023, I mean, or in the pandemic, or before the pandemic? You can have a look here and measure it yourself here. I believe that maybe you can see the return here, yeah. So if we would have bought it at, let's say, November 2023, that was here, you can measure it around here, I think. A bit longer. Around here. And if you would have bought it around that time at the price book 0.9 or something like that, then you can see that your returns would have been roughly 36%, just measured on the stock price. And mind that the operations of the bank, it's just stable and growing like usual for most. It's not really explosive growth or anything. But still, it's amazing, at least if you look in hindsight. 45% annual return if you bought the bank here at price book 09, and then now it's price book 1.4 or so. But even, let's say, even just holding it until March 2025, then you would still get a very satisfactory return, I think. Even then, close to 50% return. So that's the method to find and identify those very good profitable banks and savings banks, and wait for the price to book will fall below price book 1 or around there, and just select those very profitable banks and hold them long term. Maybe sell a little bit when it's priced really high, but I believe that just holding them for the long term, as long as the banks stay profitable, that's a really good long-term investment strategy. And these banks also pay dividends. So if you have you need to invest the dividends somewhere, you could just get dividends from the banks and then reinvest them into the shares of the banks when they are trading cheaply again. That's a really, really simple idea, and it's maybe too boring for many people because it has been really, really cheap for a long time. And if I just show you another savings bank as example here, it's if you just look at here, for example, since 1995 in the savings bank, and just include the total return here, you see that 16% annually, that's not normal, I would say, but it's one of the best profitable banks. You see the return on equity is above average, and it has stayed cheap for a long time, and there are many times when you can buy the shares at a low price to book. And just as a note here, if you're interested in these savings banks, which are called Sparebank, then don't look at the price book in a terminal like this, because you have to adjust for the equity ratio that these savings banks are using. If that's interesting, I don't think many of you, the audience here speaking English, knows about this. So feel free to follow the channel, subscribe and like it if you like this kind of content. And follow on for the next videos, and I will share more of these ideas with you. And maybe we can do it together. We can have a look and monitor these companies. When are they trading close to price book 1? I get notification about that, and then I'll see if we can meet online here if you follow a link below these videos, and we can share that information in the community. Yes, so thank you for watching until the end, and hope to see you in the next video.